Welcome to Buy Now, Sell Now viewers. I'm Cheryl D'Souza, and along with me I have Shrishti Sharma, and through the next 1 hour of trading session we will be talking to key managements on their acquisitions as well as the earnings, as well as take all of his stock related queries. But for now, Shrishti, if you look at the markets, we did see a sharp dip come in, especially when you talk about the broader markets, mid cap, small cap. Carnage going around there, isn't it?
Well, yes, and a lot of PSUs are also seen to be drifting lower, Cheryl, because in the Nifty 50 top losers today, Oncc, Coal India, BPCL, they are the top losers in trading session. A cut of 4 to 5% is what we are witnessing on that front. But stocks like PFC and RAC, they are also taking it on the chin, down about 9 to 10 odd %. Other than that, NALCO, IOC, Hindustan Copper, they are all seen to be drifting lower. Even Escorts is down after the guidance cut. On the whole tractor industry for FY24, there were some expectations in the system itself that given the Q3 performance of the tractor industry, the Q4 could be even worse, and that's what the management has highlighted from a previous +2 to -2 of guidance of tractor industry growth in FY24. They are now expecting the decline in 6 to 7% of the range. On the flip side, if we talk about, then one of the top gainers in FNO side is Aarti Industries. The management did join us on the ET Now channel a while back, and they have raised their EBITDA guidance for FY25, and that's why we are seeing a good surge. Some of the private sector banks are also once again seen to be rebounding, like ICICI Bank. They are all seen to be gaining, and even ITC is actually taking a rebound. Just yesterday, after the BAT commentary, the stock was down about 4%, and now today is up around 1.5%. So a sector-specific overall view, if we see, then no clear sector is emerging as the top gainer. But on the flip side, the top loser is indeed the PSU pack as well, Cheryl.
All right, so you have the PSU pack that's taking a bit easy in trade today, but there's one stock that is actually flying high and in fact soaring in trade, and that has to be Orchid Pharma. Look at the stock, it's trading higher by about 15% in today's trading session. In fact, it's a tad bit off the day's highest point. Despite that, it is actually trading higher by about 15%. Stellar set of numbers coming in the quarter gone by for Orchid Pharma. If you look at the numbers, it's been a beat across all the segments. Also, if you look at the profit, it has come in at around 29 crore rupees as against 8 crore rupees a year ago. The revenue seen an uptick of about 38%. The EBITDA margin has seen a rise of about 749 basis points. So what has led to the stellar performance or outperformance in the quarter gone by, and what's the road ahead for Orchid Pharma? We are joined by Manish Dhanuka, who's the Managing Director at Orchid Chemicals and Pharmaceuticals. A very good morning to you, sir. Thank you so much for joining us. And firstly, Mr. Dhanuka, let's talk about your number. If you look at the quarter gone by, stellar set of numbers, significant growth actually where we've seen in be it your top line or your bottom line or the margins. If you tell us what exactly led to this stellar outperformance in the quarter gone by?
Yeah, good morning and thank you for having me. Since we took over the company 3 years back, we've been trying to develop new customers, new markets, and I believe this is probably the result of that. We are happy that, we've got a significant growth in this quarter. We hope we will continue to have a growth in high teens for the next 2 years as our efforts to rope in new customers continue to be there.
All right. Hope to have a growth in high teens over the next 2 years. That's the commentary. Very good morning, Mr. Dhanuka. This is Shrishti also joining in. Great to have you. And we have seen the turnaround for Orchid Pharma playing in post the acquisition. But a while back, a major announcement done by the company was on the Exblifep drug that is used in various bacterial infections, urinary tract infection as well. And the approval was granted by the European Medicine agencies. Tell us about the opportunity size and how much revenue it can add to your overall top line as well as bottom line once the launch is done.
Yeah, so I'm very happy to announce that Exblifep is a combination drug which uses an antibiotic and a BLI. And this BLI would probably be the first drug which has been invented in India and which has gone on to become an approved drug in the Europe as of now. And we expect the approvals to come through in the US as well. So this is a molecule which was invented by Orchid Pharma in 2013, and it was licensed out to a German company called Allegra. And they have done the phase 3 clinical trials over the last 10 years, which they have now been able to get approval in the European market. And this is an injectable drug which will be used for chronic urinary tract infection, pneumonia, and pyelonephritis.
Let me actually put the spotlight on your global business, and also if you could help us understand what are your plans to rebuild your US business. And if I could add to that also, I know it's a divergent question, but what's your outlook that you have penciled in for the coming financial year, that's FY25?
Yeah, so we have devised multi-fold strategy, basically, besides the obvious increasing the scale and increasing the revenue. We are also moving up the value chain by introducing new products. We introduced a new combination product in India in January of last year when it became out of patent. We are going to file for the same combination in the US as NC minus on NC minus 1 day. So we hope to move up this value chain by going into the finished formulations in the US market once again. Further, we have already signed an agreement with Shionogi and GARDP to develop and manufacture their patented molecule called cefiderocol, for which we are setting up a facility for making a lyophilization vials. So we will be manufacturing our own API, and we will be manufacturing the lyophilized vials under license from Shionogi, which is still under patent. And this molecule, once introduced in India, will be a significant milestone in providing solution to antimicrobial resistance, because the Indian patients would be getting access to this molecule much before its patent expiry. So these are some of the key things. Besides this, we are setting up a plant, 7-ACA plant, for which we have obtained the PLI. So what I would say is that next 2 years, our objective is to gain momentum in the existing business, like I said, in high teens. But once our 7-ACA project comes on stream and some of these filings, when they start doing commercial business, I think we would be in a position to take a quantum leap.
The USFDA approval for AMR indication in combo with cefepime was due back in January 2024, and this could also pave the way for the approvals in the other global markets as well. Any update on that would you like to share?
So it was due in February. From what I understand, that it is going on track, and hopefully we should get the news soon.
And all the best for that, Mr. Dhanuka, as well as thank you so much for joining us on the show to talk about what actually worked well for Orchid Pharma in the quarter gone by, as well as talking about your global business as well. And that is Mr. Manish Dhanuka, who is the Managing Director at Orchid Chemicals and Pharmaceuticals. On that note, viewers, we will slip into a break on this edition of Buy Now Sell Now. When we come back, we start taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get your answers for all of your stock-related queries. Today, for our experts, we have Ashish Kyal as well as Avinash Gorakhshekar joining us. A very good morning to you, Ashish, as well as Avinash. Thank you so much for joining us on ET Now. And I must say, both of you all are actually wearing similar ties. It's kind of, for a second, I was stumped looking at who am I looking at right now. But yes, looks like it's a Friday for twinning. Blue for the win looks like it, given the fact that I'm also wearing a shade of blue. But let me start with taking the queries. We have the first one coming in from Alok. He's writing to us from Delhi. And Alok wants to know about ABFRL, which he's purchased at a price of around 235 rupees per share. Ashish, as well as EIH, which he's bought around 250 rupees per share. Should he continue to hold on to both of these counters or look to exit at current rate? Because given the fact for ABFRL, he's making mild bit of profits.
Yes, if you look at ABFRL and the other stock that you mentioned is the EIH Limited, I'll comment on the ABFRL first. The stock has shown a very strong rise on the upside, and his buy price is around 235. I would recommend that he should book some partial profits here because we are seeing some kind of a crack in the mid cap space right now. And if his time horizon is for short term, but if he is holding it for a medium to long term perspective, he can continue to hold on to the stock. But over short term, he can book partial profits, and for the remaining position, he can maintain a stop loss of 244 and then expecting a target of around 272 levels. And as far as EIH Hotel, if that is the stock he is holding, then the stock has shown a very strong rise, and we can clearly see it's trading around 397 levels as of now. And there has been a very strong move. I would recommend him to continue to hold on to the stock and aiming for the target of 450 on the upside, and on the downside maintain a stop loss of around 375.
On then, and the next query that I have is coming in on HCC. Avinash, very good morning to you first of all, and what's your view coming in on HCC? K. Parthasarathy is holding 300 shares from a price of 48 rupees. Any targets to look out for in this one?
I think, see, clearly HCC has a very healthy order book, and I think they've come out of a very long, painful, turbulent phase. I think the balance sheet is also pretty healthy, Shristi. So I would say that, despite the fact that they have held, bought the stock at a slightly higher level, if the investor can give in at least 12 to 18 months, because, clearly these kind of companies, the traction from order book to completion of the project is a long drawn process. So if you can give a time frame of at least 12 to 15 months, I would believe, 20 to 25% upside looks possible, but I think he needs to hold on. The stock has underperformed in the recent past, but I think numbers going forward would be quite strong, especially for FY25. So I would believe that, it's a good decision to hold on rather than booking a loss, because I would not be surprised that FY24 could be a very strong outperformance here. And obviously, you could see a good amount of re-rating happening here.
Right, so that's the view coming in on HCC. Avinash, another one coming your way. This one is coming from Abhishek. He's writing to us from Bhopal, and he wants to know if WellSpan Living is worth keeping in his portfolio for the next 5 years. He's already purchased the stock at a price of around 117 rupees per share.
So I think numbers which came out, Cheryl, in Q3 were quite good. In fact, there has been a good turnaround in the company's operations. It's difficult to give you a 5-year view, but I think at least over the next 12 to 18 months, I think visibility is looking pretty solid. And I think the kind of vertical they are operating, I think they have a unique positioning. So I think clearly, if the investor can hold on for the next 12, 18 months, he can expect a decent risk reward, considering that his entry price has been pretty low. So he's got a decent amount of margin of safety. So I think it's better that he holds on, because the real re-rating would happen post the FY25 numbers.
All right, Ashish, coming to you for the next query. This one is on Torrent Par. Sunita Rai from Bangalore has written to us where she is holding these shares from a price of 327 rupees. Good to hold on, or any advice to book out profits at this one? She is a long-term investor and can stay invested.
See, if you look at Torrent Par, the stock has given a very solid returns, and we can clearly see there is no stopping also over here. We can see that the stock has managed to touch the 52 weeks high and is trading near around that level. So I would suggest that continue to hold on an outperforming stock like this one. And the entire sector has been buzzing, so it's better to hold on to the stock. Maintain a stop loss on the downside at around 1070, and we can expect a target of 1280 on the upside.
All right. The next query is coming in from Bharti Dave, who is a senior citizen and a long-term investor. She has about 2,500 shares in Samana Mothersumi at a average price of around 95 rupees per share. She wants to know whether she should hold at some more or look to exit. What's your take on this, Ashish? Samil?
See, if you look at the overall stock, I think it's best to be holding on to the stock as of now, and we can expect it to continue to rise on the upside. So hold over here is the strategy, and maintain a stop loss of 3% lower from the current price and keep trailing your stop loss.
Okay, moving on. And Avinash, any advice on high-tech pipes? Anant N is holding these shares from a price of 134 rupees. Can he go ahead and add more at current market price?
Yeah, I think my guess is that the entire tube sector has been doing remarkably well, because on-ground infrastructure spending by the government projects, by the private sector has been quite commendable. So I think if the investor has a 12 to 18 month horizon, he could definitely think of adding, because I believe that they have added recently a new capacity to their existing plant. And I think the benefit of volume growth would be visible in FY25. So I think definitely if one has a long-term kind of a time frame in mind, definitely, the pipe sector is promising. Numbers are going to get better. Most importantly, input prices have been well under control. And I think domestic demand continues to be strong. So yes, he can add a little more, but I think keep a time frame of at least 12-18 months.
Okay, this one is coming in from Subata Mukherjee, and his query actually is on ITC. Is it the right time to buy ITC as well as Infosys for the long term? Avinash, do you think now is the time you can buy ITC, given the fact the stock already saw some sort of a correction in yesterday's trading session on back of that news?
My sense is that ITC is not a trading stock. If you have a 2-year plus kind of time frame, then I think ITC can give you steady returns. It's a company which has got large cash on the books plus a very healthy dividend payout policy. And plus now the hotel business is going to be demerged very soon. So I think investors could get the benefit of having a single presence in the hotel business on a standalone basis. So I think if you've got a 2-year kind of plus time frame in mind, then definitely around 400 or around this odd level, one can start accumulating in a very small way, because I think the near term upside is capped. But if you look at the growth opportunities over the next 2 years, I think definitely ITC deserves an inclusion in the long term portfolio.
But the next query that I have, Ashish, is on Pidilite. A viewer named Venkatesh is holding 50 shares and his buy price is 2,720 rupees. Good to hold on, or should he sell at this point in time?
See, if you look at Pidilite, and since around January 2022, Pidilite has been just moving in a very broad range. It has not gone anywhere, but the stock should eventually give a very strong breakout above that 2800 mark. So I would recommend continue to hold on to the stock, but the time horizon has to be at least a year and more. And we can expect the stock, once it crosses 2800, we can expect the stock to reach towards the level of 3200 as well. And on the downside, 2400 remains an important support. So hold on to the stock, but increase your time horizon to 2 years.
All right. Actually, Avinash, let me just quickly come to you. Infosys also, you're of the view that that's also not a stock that you should look for trading, right? Long-term purpose, Infosys is a yes for the in the portfolio, right?
Yeah, I think if you're looking at the next 2 years, I think all said and done, Infosys continues to be amongst the top IT companies in the IT services space. And now they're making a conscious move to AI, machine learning. So I think these initiatives are going to obviously play positively over the next 2 years. I think in the very near term, the stock will be under pressure because the margin guidance as well as the margins were under significant pressure. But you must understand that this is a cash-rich company, has a very large, good order book. So once US market revives, I think you're going to see a good bounce back. But I think the time frame here, I would be at least 2 years plus. So only then one could look at a reasonably good risk reward.
Today coming in on Infosys, but with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and just putting the spotlight on some of the flashes on the bottom of your screen. You have the RBI Deputy Governor RA, who's actually addressing at the similar event that you had Sanjeev Bajaj address, but he's making some pertinent points with regards to the NBFC, saying that the non-acceptance of deposits by NBFCs is one area which gives RBI comfort on their entry requirements. The RBI's approach has been to disincentivize the deposit taking by NBFCs. He's also saying that concentration risks on linkages with NBFCs may raise contagion risks. Also, NBFCs need to reduce their dependencies on bank credit. Apart from that, what he's also saying that not oblivion to some irresponsible practices in MFIs and need introspection in the MFI sector. So that's a crucial point. Also, the fact being that he's saying that the NBFCs can apply for on-tap bank licenses and time the NBFC sector comes out of the shadow of banks. So those are some of the crucial commentary coming in from the RBI Deputy Governor, that is Rao. And remember, yesterday we had the MPC meet outcome, and thereafter the press conference by the Governor and and the Deputy Governors, and important points made in that press conference as well. But let me continue taking your queries then, and this one is coming in from Mahalakshmi, who's writing to us from Hyderabad, and she has about 100 shares of Titagarh Wagons for around 650 rupees per share. For the long term, should she look to book out profits or hold this particular counter? Also, she also has HDFC Bank in her portfolio. at around 1,395 rupees per share. Should she add some more of this in her portfolio? Ashish, first Titagarh Wagon, book out profits or stay put with this, and next is should she add some more of HDFC Bank in portfolio?
See, if you look at Titagarh, the stock has been moving on the downside for some time, but I think the overall uptrend is still intact since the time horizon is from the long-term perspective. I think she can continue to hold on to the stock here. We can expect the stock to move towards the level of around 1350 on the upside, and on the downside, we can expect the stock to have a support around 890 level. So maintain 890 as a stop loss. Now, as far as HDFC Bank is concerned, we can see that this has been a very strong laggard, and the stock has been dragging on the downside. Both Nifty and Bank Nifty has been under pressure, and one of the reasons is HDFC Bank. The stock has not done anything over the past approximately one month and more, and is now under pressure. So, but if the time horizon is 2 years, I think eventually the consolidation will happen, and post the consolidation, we can start seeing recovery in HDFC Bank also, but it might not happen immediately over short term. Short term, there can be some pressure, but over the medium to long term, yes, continue to hold on to the stock here. Do not average it at current levels. Let's wait for around 1350 or 1340 where you can average out the stock, and then we can expect a reversal on the stock from the long term perspective.
Another one coming your way, actually, Ashish, the stock is KCP. Monish has about 1,000 shares at a price of 191 rupees per share. He wants to know whether he should hold on to this, and his time horizon is just 1 month.
If you look at KCP, I think the stock from 109 is what you said, it has moved to around 178. So the overall trend has been very, very decent. But over the past 6-7 trading sessions, the stock is being under pressure, and also today we can see some cut on the stock. So it's better to be booking out some partial profits over here, given that the mid cap index is under pressure as well. So book out partial profits since the time horizon is short term, and for the remaining positions, maintain a very strict stop loss at around 172 so that you can lock in the profit that you are making.
His buy price was 191, so he's not making profits currently.
So maintain a stop loss at 172, because then that's the good exit level. Maintain that stop loss, and right now for the entire position, 172 looks good.
This one is coming from Muni Rajalu, and this one is for you, Avinash. He wants to know whether it's the right time to go ahead and enter in some of the PSU counters like IREDA, IRFC as well as RVNL for a period of 5 to 10 years. Do you think now is the time to enter these counters which have already seen massive run-up?
No, I think, see, we have seen a good amount of correction happening here. So I think, rather than buying the entire quantity at one shot, if he can buy, say, 10% or 15% of what he wants to buy now, and the rest he can accumulate on every decline. See, because RVNL now recently came out with its numbers. I think numbers have been pretty disappointing. On the other hand, IREDA has multiplied by almost 5 to 6 times its IPO price. So I think, the investor should not hurry in deploying his capital at one shot. Maybe a 10-15% allocation as of now, and hopefully if there is a further correction, he can add more. But definitely keeping a longer term time frame, he can definitely hope to make a very good risk reward.
All right, Ashish, this one is coming from V. Murli from Bangalore. He wants to know what's the prospects of CMS Info Systems, which he already has at a price of around 367 odd rupees, as well as Ratnamani Metals, which he's purchased at 3,351. What's the prospect of both of them?
See, at CMS Info Systems, it has been moving in a very broad range for around some time since July last year, and the stock has a very important support which is going to be around 351. So I would recommend continue to hold on to the stock with 351 as a stop loss, and if it manages to break back about that 385 levels, then we can start seeing some kind of a positive traction over here. So hold on to CMS Info System, and as far as Ratnamani Metal is concerned, I think we can see some cut in today's session, but the stock is having a very important support which is going to be placed at 3070. So hold on to the stock here, and we can start expecting some reversal possibility from here on, and the upside target for the stock is going to be around 3750.
This was coming from Venkat Ramana, who's writing to us from Hyderabad. And Avinash, he's saying that he's holding 2 stocks, but for the free of cost, and that is BASsoft as well as Intellect Design. And the reason why he's saying free of cost is because he's making 100% profit in both of these counters. What should his strategy be now? Stay put with them, or look to book out profits, or hold on for some more time?
I think both counters, if he has a time frame of at least 12, 18 months, I think Intellect software has taken off quite well because it's one of those SaaS companies in India which has got a very large clientele in terms of insurance companies, wealth management, treasury, and the banks. So I think Intellect software, we are pretty positive. We feel that there could be some further upside here. On the other hand, BirlaSoft also has been doing pretty well within the mid-cap IT space. It is one of those few companies which has got a very strong order book. And I think the margin trajectory in the previous quarter was also good. The management commentary was also good. So I think keep a time frame of 12, 15 months since the investor is already deep in the money and has made a decent amount of profit. The next 6 to 12 months could see a good kind of bounce back further from these levels. So continue to hold.
Coming to you, this one is coming from Kiran Krishnamurthy, writing to us all the way from Australia, and he has SAIL in his portfolio where he's making mild bit of profits. He wants to know whether it's time to book out profits or should he stay put in with SAIL in his portfolio, and if you advise on a hold, then what's the short to medium term target that he can keep in mind for this one?
See, the overall metal counters are showing a very good sign, and we can see that today there is some kind of a pressure, but I think the overall stock can again turn back on the upside. For SAIL, maintain a stop loss over short term, maintain a stop loss of around 125.50. That's a very important support, and I think that should remain protected. And on the upside, he can look forward to book the profit at around 145, 146 level. So maintain a hold on over here.
Avinash, Krishnan is writing to us from Goa, and he wants to know whether it's a good time to buy Narayana Rudralaya or Narayana Health for a period of 2 years right now.
Yeah, I think within the hospital space, it is one of these companies which has done remarkably well. I would suggest, at these levels, he could deploy, say, 25% of his capital and probably wait for a mild correction. Then he can add more, but take a time frame of 2 years and above. I think this is a very good hospital which is run very well. And my sense is, the kind of specialty kind of areas which it works is going to enhance its operating profitability quite further. So keeping a longer term time frame, I think one could definitely chip in at the current level, but please don't deploy the entire capital at the current level. I mean, you can possibly do an SIP, which can give you the benefit of price.
One is coming in from Prince, who's writing to us from Tamil Nadu. He has 1,000 shares of TLA Platforms at a price around 1,172 rupees per share. Avinash, he's a long-term investor. He's saying after the quarterly results, the stock did fall, but he's very optimistic on the fundamentals. So do you concur with the view? Are you also optimistic on TLA Platforms fundamentals? And makes sense for Prince to stay put with this particular counter in his portfolio?
Yeah, see, I think Tanla Solutions is one of those key players which operates in the value-added services, space within the telecom sector. And I think there are very few players here. So I think, the opportunity to grow is quite significant. And I think the numbers have also been very solid. The company continues to be debt-free. I would suggest that, you need to give in some more time because the markets are slightly, uneasy over the kind of growth numbers which are expected. So I think here, if you give a time frame of at least 12, 18 months and stick to the company as of now, I would suggest that, the risk reward could be significant in the longer term. In the short term, the stock may not go anywhere because I think clearly the markets want better visibility, better clarity from the kind of management. And once that comes in, I think you could see a significant amount of re-rating based on FY25 numbers.
All right, that's the take coming in on TLA Platforms. But for this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Now let's bring on board the management of Imga World Entertainment. They have actually gone ahead with 2 acquisitions. Let's understand what's the rationale behind these acquisitions and also how the business has been for Imga World Entertainment. A very good morning to you, Mr. Jay Malpani, who is the MD of the company. A very good morning to you, Mr. Jay. Thank you so much for joining us on ET Now. And Jay, let's talk about the acquisitions and what sort of a revenue are you expecting with this? Because what we are penciling in is the revenue is expected to go up by over 1.5 times and EBITDA will rise more than 1.5 times post these acquisitions. So by when do you expect these numbers to reflect in?
Sure. Thank you so much. Good morning. So this is a significant step towards the vision of Malpani Group of becoming the biggest and most profitable entertainment company in the country. This acquisition, as you rightly said, will increase the footfalls of Imga by 2x, EBITDA by 1.7x, and revenue by 1.5x based upon the FY23 numbers. These numbers will start flowing into Imagica from April 1st. All the revenues and expenses will be in the books of Imagica from 1st of April, pending the shareholders' approval. And this will again facilitate our acceleration of geographical expansion, which we have had in various different parts of country. And the consolidated business will increase our profitability overall because these are very high margin properties, which we are adding to the listed entity. And most importantly, the rationale behind the acquisition was there was an overhang in investors' mind since the promoter group had a competitive business in their books apart from IEL. But with this attraction, with this acquisition, that overhang is no more. And this is the most significant part of the acquisition.
This is Shrishti also joining in. So firstly, congratulations on this particular acquisitions. Let's talk more on these acquisitions. How will this help streamline your operational efficiencies as well as any cost control initiatives that the company is already doing at Imagica? Will you go ahead with these further acquisitions as well? And how will this help you bring your costs down?
Sure. So with regards to cost, there are a lot of synergies which will come into play because we have already had a business with 4 different parks running in our books and Imagica being a listed entity. With the combined entities of all 5 different parks, the cost will significantly go down with regards to the common operations which we do. So you can see our profitability going much higher than what we are currently operating at in Imagica books. Because if you see our profitability in our private books have been much higher. So with these combined operations, our margins will increase, our purchasing power will increase, our pricing will increase. So these will add to the synergies and our profitability will go up post this.
All right, moving on then, Jay, there has been an increase in the contribution from your non-ticketing revenue. Is that actually expected to continue going ahead as well?
We expect the same to continue as well. We are doing a lot of things around the non-ticketing bit. We have also added a water fountain in Imagica. So that increases the dwell time of users who are customers who are visiting the park. So because of that, people are staying back more and spending more time in Imagica. So that non-ticketing bit is going high. We are also doing a lot of things in retail, which is again adding to the non-ticketing revenue as well.
Jay, what is the outlook on the theme park as well as tourism industry growth in India, and what are the opportunities present in the current conditions?
So with Wet n Joy and Saitit, we have 4 different operational parks in Lonavala and Shirdi, and the revenues of those are 125 crores and EBITDA of 73 crores. So Saitit, I would just like to add that the potential for these businesses is huge in India because tourism, domestic tourism specifically, is growing tremendously high in the country. And we believe every tier 1 and tier 2 town can have a good amount of amusement and water park based on the size and scale for each and every town. And attractions like Saitit, which is a devotional theme park, can be a very unique concept. We have it in Shirdi based on the life of Sai Baba. And we believe that devotional tourism is again a thing which can go a very long way in similar places with similar kind of attractions. So we see a very good future for amusement and water park industry going ahead.
All right, sounding very optimistic, Jay. And also, who doesn't like amusement parks and theme parks and water parks? I think come summer seasons, most of us will definitely visit one of those. But yeah, thank you so much, Jay, for joining us on ET Now to talk about the acquisitions and what it means for Imagica World Entertainment. And that is Jay Malpani, who's the MD of the company. With that, we're totally out of time on this week's edition of Buy Now, Sell Now. Thank you so much for joining us. It's a goodbye from Shrishti, myself, our producer Voske, as well as our directors Ravindra and Santosh. Thank you so much for watching.